over the charts starting from the higher time frames, going to the lower time frames, in order for you to understand how we approach the market, how we approach this pair, what we were looking for in advance before London trading session opened, and how we of course traded this short trade to the downside. Now let's start on the higher time frames. Looking at the daily time frame, what we saw today, of course we are heavily bearish on this euro US dollar for now. Why? Because as you can see, after we closed below this swing low on the daily, we had multiple days of bearish daily candles in the row, and yesterday we closed bearish again, so we said that we can target at least the yesterday's lows and potential breakout to the downside. So this is what we were looking for at the daily, on the daily time frame. Moving forward to the 4-hourly time frame, you have to ask yourself what is the structure on the 4-hourly as well. So just by looking at the price action itself, as you can see, we can see that we are in the bearish structure. Market is creating lower low, lower highs, and today what we noticed was, of course, this swing high. We had yesterday's lows down there, and we had this move to the downside, and what do we notice here is that price was not able to touch or even close the candles below this yesterday's lows. Price just retraced back, and it retraced exactly to this 4-hourly fair value gap levels. This placement imbalance we can see here, and our idea was to look for potential reversal, potential bounce to the downside in order to target again the sell side liquidity, the 4-hourly lows and today's lows at least. So this was our plan, because market is in the bearish structure, and if the market is retracing to some imbalance area in combination with the discount area, then of course on the lower time frame our idea is to look for potential shift to the downside and then look for opportunities to trade potential continuation lower. Moving forward to the 1-hourly time frame, this is what we were looking for on the 1-hourly. So on the 4-hourly, as I said before, we had this leg lower and price was retracing to imbalance on the 4-hourly time frame. But what we notice also on the 1-hourly here is, as you can see, we have this Asian session range high, and market was moving to the upside. So we can call this Asian session range, of course, accumulation zone, accumulation range. Market then broke to the upside, so we had this manipulation, we can call it manipulation, over the Asian session range as highs, and then we had on the lower time frames, we had the shift to the downside, and we traded this distribution phase. So in this case we had Asian session range somewhere here, we had accumulation, then we had this manipulation towards the hard time frames imbalance, the 4-hourly imbalance, the 4-hourly fair value gap zone, and then we had the bounce reaction to the downside set up on the lower time frames in order to trade the distribution. So we had accumulation, manipulation towards the hard time frames imbalance, and then we had lower time frames structure shift set up to the downside in order to trade this potential distribution to the downside. Now what we see on the 1-hourly, as I said, here we had Asian session range highs, and in the London session price broke to the upside, reached this 4-hourly imbalance, and it also reached this 1-hourly fair value gap zone as well. So this is really a perfect area to look for potential shifts to the downside. So what we also noticed was this small bullish fair value gap zone working as a potential support, but price didn't respect that level at all. And if price is not respecting that level, and it's this level, this zone is violated, then of course we can just dismiss it and we can just focus on the price action there, look for potential opportunities to the downside. So that's on the 1 hourly. Now on the 15-minute time frame, what we noticed was this candle closed below. We had this break of the structure, market broke and closed below the short-term lows. And of course, if you are trading just 15-minute time frame, you can wait for setup, retracement into the discount and fair value gap zone in order to look for shorts. But here on the 15-minute time frame, we saw, of course, break of the structure, and on the 5-minute we had beautiful setup to the downside. What do we see? We see this swing high, move to the downside. We have this bearish fair value gap level, discount area as well, price retraced to it, and then we entered into the short trade. Entry was here, stop loss was 10 pips, and our idea was to target the lows of the day, the sell side liquidity levels down there. And what after our entry, what also happened, we had also a 15-minute entry, not an entry but a setup on that one. As you can see, here we had 5-minute and here we had also 15-minute, as you can see, setup there. We had this bearish fair value gap level, retracement into the discount area, and of course entry in the discount area and bearish fair value gap level. This is also a 15-minute setup combination. Stop loss, same thing, goes above 10 pips and you can target those lows or at least previous low. So in this case, of course, on the 5-minute, after we saw this move to the downside and this structure shift on the lower time frames, this was a good area to take profits out of the table, and this is how we manage this trade. So hopefully you found this video helpful, so you can understand how we approach the markets on a daily basis. So make sure you check it out again, review it, and then of course we can catch up in the other videos. Take care.